Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A very significant key reversal up yesterday, coming as it did after a bull hammer. The significance was verification of something I had suspected and mentioned here. Though the crossover on Monday of the neckline of the January to February reverse head and shoulders continuation pattern, currently at 121.14, and the 2021 downtrend, currently 121.07, had effectively capped the market that Monday, ever since that day, the two trend lines had been diverging, and thus reducing the power they each had when they were combined. This left them both open to attack, as the support of the flatlining medium moving average below, currently 120.55, was a far stronger proposition, as can be seen by last week's action, when it acted as resistance before becoming overcome and now acting as support. We now have overhead the old March 2018 low at 121.52 and then the April 2018 low at 122.12. So far today, consolidation over the broken downtrend and neckline, and a first attempt higher at the March 2018 low at 121.52, but so far rebuffed. Cable, aka sterling against the US dollar. A fourth bullish white soldier yesterday and a continued incremental follow-on to the recent reactionary bullish harami. Prices are now approaching the significant overhead resistance at the 139.99 level. This has rebuffed four earlier attempts higher since late February, and even that attempt higher back in late February was turned back after only a week. So it's important to pay close attention to it, and the resistance levels beyond it, 140.75, 141.43, and the March 2018 high at 142.43. The double bottom formed since mid-March has allowed this new attempt higher. Interestingly, our preliminary target X for the double bottom is in the 142.45 area, the same areas as the March 2018 and February 2020 highs, whilst a full target X1 is in the 143.30 area. Overall, we're still well within the June to September 2020 bullish shift pitchfork, with the lower time below currently at 137.40 and the middle time above currently at 141.99. Please remember, as I've repeated often, this pitchfork has given the bullish angle of attack of this market since September last year. One final point, the lower time continues to be partnered with the rising medium moving average, currently 137.46, which had previously been an effective barrier. So far today, a fresh attempt higher, cautiously as seems right, given the nature of the overhead resistance. Euro sterling. A bullish double yesterday as the market continued hesitating between the overhead resistance, currently at 87.22, of the top trend line of a possible ascending triangle, and the support line below of both the significant April 2020 low at 86.69 and the rising uptrend currently at 86.77 of the same ascending triangle. Please remember, we are coming to a cusp in the next few days, not just for the ascending triangle, that will be by the middle of next week at the latest, but also by the chance for a monthly key reversal up. If prices close tomorrow night over the key 86.69 level, already mentioned above, then we will have a monthly key reversal up. If not, then we will have a lesser outside month pattern. Additionally, and not that far, we have the spectre dropping from above, the medium moving average currently at 87.60. So far today, a significant attempt lower, looking like a possible bearish engulfing pattern, and attacking the uptrend that makes up the ascending triangle pattern. Just beware though, false breaks lower. US dollar against the Indian rupee. Second bearish black crow yesterday, and also a hammer pattern as well. The hammer pattern was the market reacting to the dip, to the neckline, well, not even to the neckline, to the neck of the potential double top pattern in the 74.26 support area. We have below target X now for the recent ascending triangle pattern in the 73.85 area. Now the idea of a double top will depend on whether the 50% Fibonacci line of the February to April 2020 move at 74.26 holds, and how it does so. So far today, a further drop below the 50% Fibonacci line at 74.26, thus formalizing the idea of a double top formed over April, as well as obviously the descending triangle and its target in the 73.85 area. We now have an initial potential target X1 with a double top below in the 73.45 area, for full potential target X2 in the 73 even area. US dollar against the Brazilian real. A combined bearish open and close black Mariboso and a bearish engulfing pattern as well. The latter was hardly surprising, as the previous session was an indecisive spinning top. What was surprising was the vehemence of the move lower, how large it was, as it took out what had looked like and started to act as a heavy mass of support made up of the recent 50% Fibonacci line at 544.41, the medium moving average currently 545.18, and the long moving average currently 544.28. The reason for this move lower was the same as last week, the move down below the recent sideways triangle. In the process of dropping down, the market had reached the initial target X for the sideways triangle in the 541.15 area. Not that much of an ask once the supports mentioned above had been dealt with. The fall had halted, interestingly, at the lesser 38.2% Fibonacci line of the recent move at 534.15 and the bottom of the congestion from back in February this year. Below, we now have the full target X1 for the sideways triangle in the 513.80 area. In between, we have the Fibonacci congestion supports at 525.67 and 520.30. US dollar against the Mexican peso. A bearish dark cloud cover pattern yesterday, almost making either a key reversal down or a bearish engulfing pattern. It seems obvious that the market is not that comfortable with the idea of a small double bottom formed over the last 3 weeks. Additionally, or instead of, it could be a reaction to approaching the overhead neckline of one of the two head and shoulders top patterns that have been formed over this year. To recap, there are two possible head and shoulders tops, one from mid-January to late March and the other from late February to early April. In the first case, we have an initial target X3 in the 1971.70 area with a full target X4 down in the 19 even area. In the second case, we have an initial target X1 in the 19.5 area with a full target X2 down in the 1885.5 area. These came into doubt recently because of the breaking of the March downtrend that I've since removed, but are still there despite some severe pressure to the contrary. In the background, there is still the possibility of a larger double bottom pattern formed since November of last year. Yesterday's action neither assists nor denies this possibility. So far today, a dip lower, but a limited one, and prices have since returned to the area of the close and yesterday's close and started to move a little bit higher. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.